with another dividend talk video. All right, and in this video, I'm going to go through the factors that I consider when acquiring a new stock to add to my dividend portfolio. All right, so currently in the portfolio, I have 20, I think it's 26 or 27 dividend stocks, and I'm currently getting paid $11,307.63. Now, for me, I like to, when I acquire a new stock, I like to get 40 or more shares before I start to look at other stocks to possibly add to my portfolio. Usually it's around 50 or better. But today, the stock that I want to look deeper into is Prudential. All right. Prudential Financial. All right. And this is a global financial services leader that provides insurance, retirement solutions, and investment management to both individual and institutional clients. All right. Now, this is the first thing I like to do is to know what the business does. All right. So it's in the global financial services sector, and it's a leader in that sector from what the AI is providing me those details. So the next thing I want to do is look at the stock and its price. All right. So we pulling that up on the Google AI mode, and is doing this thing, searching through. All right, so today it closed at $93.29. And if we look at some deeper details, the 52-week high was $90.38. Well, the 52-week low is $90.38. The 52-week high is $119.76. All right. It goes into some recent performance and trends, dividends and capital returns. The stock offers a high forward dividend yield of approximately 6%. The quarterly payment is $1.40 per share. All right. The average target price is $110 to $115. All right. So two things here, right, that I want to point out. First is the quarterly dividend, $1.40. Right now, I believe the stock is trading at $93.29. This is just my rule of thumb. I am not a financial advisor. Do your own due diligence and research. But when I buy a stock, one of the considerations I pay attention to is how much every quarter I will be getting paid for every $10 that stock cost me. So for every $10 that this stock cost me, I would be getting more than 10 cent. All right. So the dollar, was it $1.40 that it pays a quarter? That is right now the price that is at, that's ideal. So that's a one good check mark for me. Another thing, the average target price is 110 to 115. Right now it's at $93. So I would be able to start to buy a position, and I would be getting that position well under what the average forecast is for probably the next 6 to 12 months, which is very, very good to me. That's something that I like to do as well. So we got two good marks on there, two good checks. So the next thing I'm going to do is check on how long Prudential has paid dividends. All right, so now we see that Prudential has paid dividends since 2002. All right, the company has increased its annual dividend for 18 consecutive years as of February 2026. This is good. All right, so this tells me that the leadership has an eyesight on consistently giving back value to the shareholders. I talk about Dividend Aristocrat and Dividend Kings a lot. The Dividend Aristocrat is a stock that has consistently paid a dividend and increased it for 25 plus years. With 18 years of doing that consecutively, that lets me know that that's something that is a goal and a target for that company. So that's something good. That's another good check mark for me that they get from me in my book. Um, uh, so another thing I want to check out is, has Prudential ever cut its dividend? All right. Prudential has cut its dividend once since its IPO in 2001. The 2008 dividend cut in November 2008 at the height of the global financial crisis. Prudential cut its annual dividend by approximately 50 cents, from $1.15 to 58 cents. Reasoning management described the cut as a prudent move to preserve roughly $240 million in cash amid severe market volatility and credit crisis. All right, so now this is a bit of a yellow mark for me, because looking at the way that the economy looks right now, the volatility of the market, this could be something to consider, that this could be a repeated pattern, or from '08, where they may have to do that in 2026, depending on how certain geopolitical issues shake out, and how fast those things may be able to get to a resolution. So that's something that I'm gonna, keep in the back of my mind, and keep on my caution list. Right. And then the last thing I want to look at is Prudential dividend safe? All right. Based on current financial data and an analyst forecast for 2026, Prudential's dividend is generally considered safe and well covered by both earnings and cash flow. All right. So that's very important to me, knowing that the dividend is considered very safe, and it's most importantly well covered by the earnings and cash flow, because that's really what's important when you're talking about dividends. Not so much the share price, but how much earnings and how much of those earnings is going to be able to be given back to the shareholders. So this is right now is definitely a stock that I will have on my watch list, and possibly I may enter a position maybe the second quarter, towards the end of the second quarter, just when I get a little bit more insight on what's going on with the Iran conflict, to make a determination if I could see this dividend being pulled back like it was in 2001. Right now, with them being so close to having 18 years of consecutively paying a dividend, especially since they didn't cut it in 2000 when the pandemic occurred. I will probably pay attention to the earnings reports and what leadership may be saying about the dividend if we start to see more of a crunch in the economy. All right. And especially in the stock market. But if you have any questions, any comments, please leave them below. And I just wanted to give some insight on a new stock that I've been looking at, that I may be adding to my dividend portfolio. But I'm Walt, and I'll talk to you again soon.